The U.S. 10-year Treasury yield slips back below 5%. The Dow Jones breaks a 4-day losing streak as major indices surge on the back of strong earnings. Asian markets trade mixed on the back of a strong handover from Wall Street. The GIFT Nifty is implying a mildly higher start for the Indian market after yesterday's trading holiday. And crude slips for the third straight session. Brent trades around $88 a barrel as weak economic data from Europe weighs on the outlook for demand. Cryptocurrencies too see big moves. Bitcoin rallies over 8% and tops $35,000 for the first time since the May of 2022. The currency has also doubled in value in 2023. Axis Bank is likely to see earnings come under pressure and declining net interest margin in the second quarter. Tech Mahindra is also likely to deliver a weak set this time around, with revenue growth seen declining for the second straight quarter as the communication vertical comes under pressure. Deal wins are also likely to remain muted. The Hamas releases 2 aged hostages back to Israel on humanitarian grounds. The UN Secretary General warns of conflict spreading through West Asia as the situation in Gaza turns more dire. Also appeals for a ceasefire after Israeli strikes reportedly kill over 700 people in Gaza in a single day. Hey guys, a very good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we have for you this morning. There's a lot for us to track, especially, after the market holiday that we did get yesterday. So we're opening up after that break, but it is from the US a good handover. The Asian markets are pretty mixed this morning. So you do have some which are really surging. So the Hong Kong market, for instance, that is the one leading gains. That is up over 2%, 2.1% to be precise. The Taiwanese index also seeing a move almost 0.7% higher there. The Nikkei is up over 1%. You have Shanghai also, which is seeing a good move. The only markets in Asia which are a little bit under pressure is the Straits market and the Korean Kospi index. So those are some which are seeing cuts right now. It's nothing too bad, but around 0.25% shaved off for both of those markets. The GIFT Nifty will come up for you, and after that complete meltdown that we saw on Monday, we are expected to get a slightly higher start right now, just around 36 points higher on the GIFT Nifty. But remember, this is after the 260-point cut that we saw for the markets on Monday, and after, of course, a 1,000-point cut that we saw on the mid-cap index. So it'll be very interesting to see how the rest of the trading session pans out as well. But since we're talking about the global markets, let's talk about the US as well. We had Wall Street, which ended Tuesday's trading session higher. So the Dow was the one which surged around 200 points. There you have it on your screen. We had the S&P 500 up around 30 points, and the tech-heavy Nasdaq actually was the best performer of all of these. It was up almost 1% at the end of the trading session. Now, we do have a lot of important earnings which have been coming through from the US as well. So let's just go through some of them. Alphabet was one which disappointed the street. So, the shares were under pressure in after-hours trade. This after the company's cloud revenue disappointed. Overall, if you look at it, it was still, a better than estimated quarter. But the cloud revenue really came as quite a miss for Alphabet. Then if you move on, we had more from the tech space. You have Microsoft. That was quite good. It jumped around 3% in an extended trading. This after the quarterly results came in better, and the revenue guidance also beat street estimates. So that one held up quite well. And the firm's cloud revenue, like I was pointing out, saw a big move higher after 2 quarters of deceleration. So the street definitely likes the sound of that. There are a lot of other stocks which reacted positively to earnings. So those include Coca-Cola, Spotify, Verizon, while there are some which were under pressure as well. So something like a General Motors was slower after the company pulled back on its full-year outlook amid rising costs due to the UAW union strike that we've been talking about. So that is the entire lot of earnings that came through from the US. We're going to keep bringing you up to speed with anything more. But some important opinion as well. JP Morgan Chase CEO Jamie Dimon says that 18 months ago, central banks were 100% dead wrong about economic forecasts and that he would be cautious about what might happen next year. Speaking on the Fed's next move, he says it doesn't really make much of a difference if the Fed hikes by 25 basis points or more. So that is the word coming in from Jamie Dimon. That's everything that we're looking at as far as the U.S. markets are concerned. But let's also listen to former Kansas City Fed President Thomas Hoeing as well as Jeremy Siegel of the Wharton School talking about inflation in the U.S. and rising treasury yields. Listen in.
They are being cautious. As I said, if they wait till December, 6 months. And in the meantime, the economy is growing very stronger than people anticipated. And so we will move along that line, and they are going to try and wait and see. And in the meantime, rates are going up because candidly, we spent a lot of money, the government did, in the last 3 years, and that's actually the last 10 years, but the last 3 years, enormous amounts of money. And so the economy is stronger than people thought it would be. And the government still has to pay its debts. And so they're borrowing more. They're putting tremendous amounts of additional new debt into the market.
Yields have risen. If it's stronger growth, what would you rather be in, stocks or bonds? I mean, clearly, stocks are the place to be in if we get stronger growth. And I don't mean just for last quarter. I think the promise of AI is real. This year, our growth is being driven by productivity. We actually have payrolls that are only half as big increase as we had last year, and we had less than 1% GDP growth. And this year, we're going to have well over 2% GDP growth. So productivity-driven growth, I mean, first of all, it brings inflation down. It's good for earnings, but it does drive yields up. Higher real growth, more borrowing, more capital investment.
All right, so that is some important opinion that we're tracking from across global markets. But let's also bring you the final update in our global market wrap this morning. Cues coming in from Europe, and we have seen quite a good move higher there as well, because we snapped a 5-day losing streak. So the CAC index, the French index, is up around 43 points. The German DAX surged around 80 points at the close, and the British FTSE up around 15 points as well. So across the board, a little bit of green coming through from Europe after 5 days of losses that we've seen in the region. Now, if we talk about business activity in the Eurozone region, we saw a surprise downturn in October with the Composite Purchasing Managers Index falling to a 3-year low. So that is something important to watch, and this really stirs some recession worries in the region. Activity in Germany also contracted for the 4th straight month in October, with a renewed decline that we've seen in services. So that's some important cues coming out of Europe that we're tracking very closely. And that's what's going on across the world. We do need to get into a short break, but when we come back, we're going to talk about how all of these cues really impact our own markets, as well as some of the stocks that you should watch, because we are in the thick of the earnings season. So stay tuned. We'll be right back with that. Welcome back. You're still tuned into Power Breakfast. Now, we were just going through the entire global setup. So let's bring our research team in and drill it down to all of the domestic cues as well. We have Mangalam, Vivek, as well as Surbi joining us now for the trade setup this morning. Guys, a very good morning to all of you. Vivek, let me come to you first. We were going through the global setup just a short while ago, but take us through everything that we should watch, especially after that quite terrible session that we had on Monday.
Well, absolutely right. After the brief respite that we had on Tuesday on account of lack of trading, what we're actually looking for today is some amount of a bounce back as far as markets are concerned. Global cues in that aspect have been quite supportive. Like you mentioned earlier, the U.S. markets did see a bounce on Tuesday's trading session. One positive factor has been the fact that crude prices have continued their decline for the 3rd straight session. Brent futures down over 2% and WTI futures down over 2.1% in yesterday's trading session. Now, coming to the Indian markets on Monday, did not paint a pretty picture. What actually happened was that the sensex actually saw significant sell-off, 4-month lows. Nifty breached the 19,300 levels. All of these important levels, Nifty will have to recoup in today's trading session or in the sessions to come. However, where we actually saw the biggest pain was the broader end of the markets, both the mid-cap as well as the small caps actually saw significant fall, and it was the biggest fall as far as entire 2 months was concerned. Along with that, earnings that even missed analyst expectations were severely punished. Case in point being Lotus Labs. Even RBL Bank, mid-cap banks saw significant selling pressure as far as the second half of the trading session was concerned. But today, a lot of important cues. There will be result reaction. One important result was Torrent Pharma. A lot of important results lined up today. So names like Axis Bank, Tech-M, Jubilant Food, Industar, all of these companies will be declaring the results heavy week ahead of us, and it'll be interesting to see how markets go ahead and respond to all of the numbers that do come in.
All right, we are going to watch for that very closely. In fact, let's bring Surbi in, because she's going to take us through all of the numbers in a little bit more detail. Surbi, take us through all of the action on the stocks front.
So, hi, good morning. So, the first one is Torrent Pharma, good numbers, inline performance. The revenues for Q2 were up 16% on a year-on-year basis. EBITDA came in at 825 crores versus 680 crores same time last year, and margins came in at 31%. PNB Housing, there were write-offs that aided the NPA. Asset quality, if you see, the gross NPA is down 52%. The net NPA is down 53.5% sequentially. Mahindra Logistics, the revenue was up 3%. EBITDA was down 20%. Margins came in at 3.9% versus 5% same time last year. Apart from the results, we have Delta Corp on our radar. The Goa bench of the Bombay High Court directs the GST Hyderabad not to pass final orders on the 16,195 crore tax notice. Vedanta will also be on our radar as Ajay Goel has been reappointed as the CFO with effect from October 30th. And as Vivek mentioned, we'll be watching out for Axis Bank, Jubilant Foodworks, Tech M and Sona BLW as they'll be coming out with earnings today.
All right, we're going to watch for all of these stocks. Surabhi, thanks a lot for bringing us up to speed with all of that action. But let's also get a check on how things are looking on the futures and options side. Mangala, Monday was extremely weak. Take us through what you're tracking this morning.
Well, it was a respite that we had a holiday on Tuesday, and as a result of which, there has been some cold towel treatment. The market's looking a lot better than what we left it on Monday itself. There was a big fall on Nifty and Nifty Bank, but that wasn't really the real story. If you just take a look at the way the mid-cap and the small-cap indices fell, that would tell you that the extent of the fall was a lot more in the broader markets. The portfolios felt a lot worse on Monday than the frontline index itself. But some respite today after the global markets have seen some bit of recovery. The bond yields have cooled off to 4.8 thereabouts as well. And the GIFT Nifty is indicating a 35-36 point uptick. The question is where we go from here. And out there, remember tomorrow is tomorrow is a Thursday and it is the series expiry. And in that, the FIs are still 74% short. In index options, the data point that stood out was them selling 3 lakh calls. This compares with just 30,000 puts that they've sold. That's telling you that any bounce back at the initial level will see some bit of a sell-off vociferously, and once it holds on to higher levels, then these call writers will actually have to unwind their positions, and that will lead the market higher itself. The FIs, have they positioned themselves for that? Yes, they have, because they bought 2.87 lakh calls as well, and they've unwound some of the long puts, booked profits out there too. The Nifty put call ratio is a gauge of fear and greed. 0.7% is where the Nifty put call ratio right now stands at. It suggests that market is at an oversold level, so we are expecting a bounce. Where does that bounce go all the way? Well, 19,400 call has seen a fair amount of writing for a premium of 40-50 odd rupees, and we have the 19,500 call seeing some writing at around 20 rupees as well. We have the 100-day moving average of the Nifty at 19,400, so levels upwards of 19,450 might face some congestion, but at the lower level we will see strong support around 19,250 and 19,300 itself. The Nifty Bank will have bounced back from the 200-day moving average in today's trading session. The question is whether it sustains above that or not. And finally, I'll just watch out for Delta Corp. It exited F&O ban on Monday, did well in an otherwise weak market, and now we have positive news as well.
All right, Mangalam, thanks a lot for taking us through all of those cues. That is the setup as we see it this morning. It is time for a short break, but on the other side, we're going to bring you up to speed with the latest in the conflict in West Asia and what it has meant for all of the commodities as well. Welcome back. You're still tuned into Power Breakfast, and let's now focus on the latest from the ongoing war between Israel and the Hamas. As the war now enters the 19th day, Israel has demanded for the resignation of the UN Secretary General for his comment on Israel's appalling attacks against Palestinians. The humanitarian crisis worsens in Gaza as well, as the military has announced that they will not allow fuel to enter into the Gaza Strip. We have NBC's Hala Gorani here with all of the details.
The latest is that the Israeli military is dropping leaflets over Gaza, asking ordinary Gazans to help them with information on where the hostages, the more than 200 hostages detained still inside of Gaza, are located, and promising even monetary rewards. We understand that there are ongoing negotiations for the release of those hostages. We saw 2 sets of hostages released. the first two a few days ago, and yesterday 2 elderly women, including Yosheved Lifshitz, who's 85 years old. She described her harrowing capture from her kibbutz outside of the Gaza Strip, and then described a little bit what it was like when she was then led through a network of underground tunnels, that she was by and large treated well by her captors and given medical care and food and water. But the humanitarian situation in the Gaza Strip is dire. The United Nations Relief Agency is saying that 35 of its staff have been killed so far, and that if it does not receive fuel in the next 24 hours, essentially it has to cease operations. And we're talking here about hundreds of thousands of Gazans who are in need of shelter, who are in need of food and medical care, and hospitals as well are at a breaking point. And just one note about what's going on outside of the region, because this is all playing out in the UN Security Council. Antonio Guterres, the UN Security General, is saying that Palestinians have been subjected to 56 years of a suffocating occupation, and that really drew the ire of the Israeli foreign minister, who canceled a planned meeting with the Secretary General and was very angry at some of the things that the UN head said about Israel's actions in Gaza. Back to you.
All right, that is the situation right now in West Asia. Extremely tough, and that really continues, like we were pointing out, into the 19th day today. Let's also talk about the commodity space now and what all of this has really meant for that. Manisha is joining us with an update. Manisha, there seems to be a bit of a cooling off in some of the closely tracked commodities as well.
Oh, absolutely, Pavitra. Yes. Let's start with the crude oil prices itself. And today is the third straight day that we have seen a decline come in. Prices did fall 2.5% in the markets yesterday. We are trading at a one-week close right now, and we are trading below $90 a barrel. That is because the Israel and Hamas conflict seems under control right now. There isn't a further escalation. There even is humanitarian aid going into Gaza Strip, and that is what has led to some profit-taking in the markets. Apart from that, U.S. also easing sanctions on Venezuela has been supportive. Markets will watch out for the U.S. GDP and inflation data. That is what the street will wait for this week. Now, not just crude oil prices, you have seen profit-taking come in for gold as well as the safe haven demand goes away. And buying in metals is how the street is reacting today on expectations of further stimulus coming in from China.
Manisha, I thought you would mention the crypto prices with what we've seen go on, across Bitcoin, Ethereum. It's been quite crazy there as well.
Oh, well, absolutely, Pavitra. There have been some positives, especially when it comes to Tether, Hedera, and Bitcoin. The buying also has gone up because of the geopolitical tensions. That always happens. We do see buying and more, transactions shift into crypto rather than fiat currencies every time there is a problem. So all of these factors absolutely supporting.
All right, interesting moves there. Manisha, thanks a lot for bringing us up to speed with all of that action. We do need to wind down on the show on that note. Thanks a lot for tuning in. We have Bazaar Morning Call coming up in 2 to take you through all of the action ahead.